Hey everyone, sometimes I get asked, should I hold Bitcoin as an asset even if I have near-term cash requirements or I'm getting close to retirement? The answer is actually it entirely depends on what your tolerance is for volatility. And here's what I mean. It depends on how tight your finances are and how much it's going to mess you up if there is near-term volatility. Meaning, does it totally throw you off if Bitcoin goes up or down 5% or 10% or 25% or something like that. So let's use a couple of examples. In my case, I hold essentially, as I've said before, 97% of my liquid net worth in Bitcoin. The reason I have the other 3% is if I have some sort of an emergency that requires some sort of financial outlay, and it just so happens to be on a day that Bitcoin dropped 25% for some ridiculously stupid reason, and I know it's going to recover the next day. I don't want to be stuck liquidating Bitcoin when there's this sort of ultra sort of short-term cash crunch just because I need to pay a tuition payment for Rachel's school. She's in a graduate program, a remote graduate program for Georgetown University, getting sort of a master's degree as a nurse practitioner and a nurse midwife. So anyway, I pay tuition we pay tuition payments once a semester on that. And when one of those tuition payments is coming up, it absolutely has to be paid. Well, right now I just liquidate some Bitcoin and I pay the tuition payment, but I keep just enough US dollars that if I had to make one of those payments, because I usually pay them like the day before they're due, like at the last minute, because I want to not liquidate Bitcoin as sort of as late as possible. But I have just enough cash reserves that if I actually had to make a tuition payment with cash instead of Bitcoin, I can, to avoid a situation where Bitcoin's down for some stupid reason very temporarily, and I'm stuck liquidating Bitcoin at a price below what I want. So again, my tolerance for risk is very high, and I could always pay the tuition payment anyway, but I try to keep just enough US dollar cash reserves that I don't get in a bind like that, and I at least have the choice of making a tuition payment with US dollars or Bitcoin, even though normally it's just I'm going to liquidate some Bitcoin because all of my money goes in Bitcoin anyway. And so when I need a major expense, I typically liquidate Bitcoin, but I do keep a small cash reserve, which is represented by the other 3% of my liquid assets that's not Bitcoin. So I've got 97% of my liquid assets in Bitcoin, and I've got 3% that is not in Bitcoin, which is just enough to make a tuition payment or, a tuition payment for our kids in the hybrid university model classical school that they're in, things like that. Okay, so generally though, even if I have a major expense coming, I do not liquidate the Bitcoin till literally the last possible second. But again, I can handle that volatility. I know I've got a small US dollar cash reserve, which is in like stocks and bonds and whatever normal people invest in that have not discovered that Bitcoin is better. And then I've got, so if any major expense is coming, I'll typically liquidate the Bitcoin at the last possible second because, again, the upside of holding the Bitcoin far exceeds the downside, and I want to benefit from that upside as long as conceivably possible. Now, for people that can't handle that volatility, so let's assume you're approaching retirement, you have a hip replacement surgery, you have to pay for that hip replacement out of cash, and it's going to require basically all the cash you have. It's your only source of, financial wealth. And if you don't get that hip replacement, it's going to ruin your quality of life. And this is really your one shot. Well, that's a tough situation. In that situation, if you can't handle the volatility of even a 5% drop in Bitcoin, then you're stuck liquidating Bitcoin significantly in advance of, that hip surgery when you absolutely know you've got enough US dollar value of Bitcoin to do it, because you can't handle the potential dip between when you schedule the surgery and when it actually happens. And obviously you don't want to ruin your quality of life by not getting a hip replacement surgery that you absolutely got to have. But again, it's a function of to what degree your finances can handle that volatility. Now, the same is true for retirees. Depending on, when you're retiring and what your capital needs are, how much of your money you need based on how much you have, I would anticipate, even if I was very close to retirement myself, which I'm not, but even if I was, I would still have the vast majority of my assets in Bitcoin. And again, the logic there is I'm only going to need a small portion of those financial assets in any given year. I mean, if I, were to hypothetically retire when I still had 30 years of life left, then hypothetically I'm only using 1/30th of my financial assets in any given year. And because I have a very high risk tolerance, and because my financial assets, presumably would be, much more than is required in any given year to cover that, then I would still have a high Bitcoin exposure, much higher than most people. Now, again, if your financial assets are barely enough to squeak by and you can't afford sort of any variability at all, then you can't do that. But that's the way all assets work. It works the same way with the stock market. If somebody came to me and said, hey, I want to invest in the stock market, but I'm living paycheck to paycheck, and I can't even afford a 1% drop in my assets, or my family's going to go hungry, then I would say, well, that really sucks, because that doesn't just disqualify Bitcoin, that disqualifies every potential investment. If your finances can't handle a 1% drop in your assets, or the purchasing power of your paycheck between when you get paid and the next 2 weeks, if it can't even handle a 1% downside, then that means you can't invest in stocks or bonds or real estate or any other financial asset, because your finances can't handle even the 1% downstroke of even sort of normal assets. And even the S&P 500, which is the 500 largest U.S. publicly traded stocks, even those go up by, up and down a couple of percentage points in any given week. So even those assets, which obviously that represents the massive U.S. stock market, is too volatile for somebody who can't handle even a 1 or 2% change over the course of a week or two. So anyway, if your finances can handle it, you can handle, if you have enough wealth as compared to your financial needs, that ratio of what is your wealth as compared to your financial needs determines how much volatility that you can handle. And obviously, if you can handle a lot of volatility, then you can afford to be much more exposed, or have much more of your wealth in Bitcoin without it totally messing you up. But again, all investment assets work that way. And even, regular old financial advisors that take 1% of your assets every single year, even those financial advisors will typically move you from more stocks and less bonds when you're younger to more bonds and less stocks as you're older, for the exact same reason. The closer you get to retirement, the less they presume you can handle the volatility, and the less you can handle the volatility, the more they want you moved into assets that have a lower upside, but have less risk. So the same is true of Bitcoin. It's just a function of to what degree can you handle that volatility. In my case, my finances can handle a high degree of volatility because, I've got the wealth built up from building Baumgar Corporation and the Bitcoin that I bought with that wealth and all of that. And obviously I've been working, as president to Prospera and lots of other things. So my finances can handle a high degree of volatility, meaning I can be very exposed to Bitcoin and it's not going to mess me up because there's just a lot of flexibility in my finances. If somebody, again, the closer you're living paycheck to paycheck, the closer you're living to a razor thin margin where there's just not even tolerance for a 1% change, well, obviously then the closer you get to that, the more investment assets are off limits. And unfortunately, the investment assets that become off limits when you can't handle the volatility are the best performing assets. So the best performing asset in the world over the last 10 years is Bitcoin. But if you can't handle the volatility of Bitcoin, then the next best performing asset that's, diversified is perhaps the NASDAQ, which is a technology heavy sort of the NASDAQ 100, which trades under the ticker symbol QQQ. So, but if your finances can't even handle that, well, then maybe it's the S&P 500, which has a lot more companies in it, and there are a lot bigger companies that are in the S&P 500. But again, if your finances cannot handle that, now you're stuck in much more conservative, 60-40 stocks and bonds portfolios or something like that. And again, each step down comes with lower volatility, but less upside. Bitcoin is, of the major asset classes, the highest upside, but also the highest volatility, because the two always go together. You can't get high upside with low volatility. That asset class just doesn't exist. For assets that are very high performing in the long term, the higher performing they are, typically the higher volatility. So you've got to be able to handle that high volatility in order to get the upside of that asset. And again, among major asset classes, Bitcoin has been the best performing asset, but it also has higher volatility than other lower performing assets that have less volatility. So again, it all comes down to what tolerance do your finances have for volatility, and can you handle 5%, 10%, or even 25%, or even much more? I mean, we may end up in a crazy euphoric price period later this year where Bitcoin gets into the hundreds of thousands of dollars per coin. But typically a euphoric rally like that is followed by a relatively significant price correction. And so again, if we're in a completely euphoric time frame, which I'll tell you if I think we are, I don't think we are right now, but I could be wrong, but I don't think we are right now. But if we get there and Bitcoin suddenly over the course of 2 months rocketed from $100,000 to $300,000, then I'm going to be recording videos that are much more conservative, saying, hey, like euphoric rallies like these might last, but you might get a big correction. And if you have a major cash need, you need to be ready for that. But I don't think that's where we are now. But again, I could be wrong. So again, it all comes down to how much volatility can your finances handle, and the higher volatility they can handle, the higher upside your finances can potentially get with higher performing assets like Bitcoin. One more thing I'll say is, obviously, I use the example of retirees, right? As people get closer to retirement, typically it's recommended that they sort of ease off on the gas pedal with regard to their investment assets and get more and more conservative as they get closer to retirement. But think about this. If you walk into any casino in the United States, it's mostly retirees sitting at the slot machines. Well, let's think about that. What's going on there? Well, the retirees, the exact same people who have the least ability to just randomly lose money, are sitting at slot machines, which is probably the thing most likely to take their money away. So what's going on there? Well, for one, some of them are just being super irresponsible with their finances, but some of them just have plenty of financial resources, and they've decided that they want to gamble some of their financial resources, and they can. And you know what? It's their right with their own money. If their financial resources, if they've got plenty of financial resources independently, and they decide that the way they want to use some of their financial resources is as a slot machine, I would say, well, that's a stupid place to put it. Like, the house, wins in the long term. So why would you ever go into a slot machine if the odds are against you? But on the flip side, there are assets where the odds are in your favor. So in the case of Bitcoin, Bitcoin is up more than it is down over the long term. So, which is why it's the best performing asset of the last decade. So if somebody came to me and said, I have a high degree of, confidence and a high degree of risk, even if they were a retiree and they were like, look, I just got $10,000. I don't care if I lose it or not, but I'd love for it to be 10 times as much. I would say, well, great. Bitcoin's a great asset for you. And there's a good chance over the next 5 or 10 years, you'll make 10 times your money on Bitcoin. It's going to be a roller coaster ride during that time. But if you're great with that, then go. At least in the case of Bitcoin, the odds are in your favor. If you go to a casino, the odds are not in your favor. So why are you playing games where the odds are against you when there are rock solid investment assets where the odds are in your favor? But again, it all comes down to, do you have assets that you absolutely can't live without? And the general rule of investing is don't ever invest in anything if you can't handle the volatility, and don't invest assets that you can't afford to lose, which is the universal rule for no matter what you're investing in. So anyway, hopefully that principle is helpful. It all comes down to how much volatility your finances can handle, and the higher volatility they can handle, the higher performing assets you can invest in, including the best performing asset in the last 10 years, which is Bitcoin. So if you can handle that volatility, the more you can handle it, the higher percentage of your assets can be in Bitcoin, and the longer you can hold that closer to when you'll actually need financial resources. Because again, even if you need financial resources in the near term, like even if somebody said, look, Joel, you got to liquidate some Bitcoin next week, would you hold it in Bitcoin this week? And my answer is yes, because sometimes Bitcoin's going to be down next week, but more times it's going to be up next week. So in the long term, any asset that is much more up than it is down means more times than not, I'm going to be up. And that's the way all assets work, whether it's the S&P 500 or the NASDAQ or anything else. If you're invested in an asset that is more up than down consistently over long periods of time, then it makes sense to be in that asset more rather than out of that asset. And again, sometimes when you're cutting it close, meaning you stay in that asset all the way up to the last minute. Sometimes the markets are going to move in your favor and sometimes they are not. But if you're in a really strong asset class like Bitcoin, they will move in your favor more than they will not move in your favor. And every investment is ultimately a judgment call of to what degree you believe an asset will move in your favor more than not in your favor. So hopefully that's helpful as a framework for thinking about this. Again, in my case, I tend to keep almost everything in Bitcoin all the time, even up to the last minute. But again, I can handle that volatility. So everybody has to calibrate with their own finances what they can handle and what their emotional well-being can handle. You know, if it bothers you too much to be in Bitcoin when it's down, and, you know, adjust your size. You know, maybe you're over invested if it's keeping you up at night and you can't sleep. But on the flip side, you know, most people, in my opinion, are under invested and vastly under invested in Bitcoin, given how high performing an asset it has been in historically. So hopefully that framework helps. Have a great day, everyone. Thanks.